Globally, all governments and central banks are going into territory never before seen, the results of which, of course, will be on a magnitude unimagined. When a country inflates their currency, they do so out of desperation, not skill and calculation. But today we are watching every central bank around the world panic. This will not end well. You came here for the truth, so let me unveil that for you. Today we're going to look at what the central banks are doing. I want to show you how this has multiplied, how this has become a problem, not just in one place, but everywhere. And I do believe there is coordination between all of these central banks. We know that they do have open lines in between each other, as we have seen all of them say that. How deep it goes, of course, we don't really know, because their activities are behind in the shadows. They are behind the curtain, and we try to reveal that with little pieces of data, and we connect the dots. I'm going to do a quick video today, but ultimately what I wanted to show you was simply the fact that this is going into levels we have never seen before, and of course the magnitude will be unbelievable. It will be unbearable for the majority to take. If you actually actively are looking into this information every single day, like I am, like the subscribers here at the Money GPS are, you're going to be figuring it all out. But it's not just which stock do I have to buy today. You have to look into this on a deeper level and understand what's truly going on. So let's begin. Here we have the Federal Reserve's balance sheet. I don't have the newest numbers. This is as of last week's. When this video posts, the new numbers will be out. We're already over $7 trillion on the Federal Reserve's balance sheet. I will include that in the next video I do, of course. I give you a weekly update on that. The trajectory is very clear, and that is up and rising. Other central banks around the world are doing the same thing. The activities of the Federal Reserve might be a little bit different than that of the Swiss National Bank, which we'll cover today, the Bank of Japan, which we'll cover today as well, and others. But you can see what they're doing. They're buying assets. These assets would normally have to be purchased by investors, but instead today the Federal Reserve has decided to be that investor. Instead, what should be happening is fair value should be achieved. If something is to fail, that's okay, because stronger corporations will come in and they're going to buy up these different failing companies. And it's not bigger companies that are necessarily going to do better if things were allowed to actually naturally occur. It's those who had been wise, those who had practiced prudence, those who have been there the entire time, not extending themselves, doing things according to how this was all intended, not pushing this out into the absolute maximum, utilizing debt, stock buybacks when you should have been building a sound foundation. No. Today, everything is messed up because of what they do. The moral hazard is at an extreme level, but we shouldn't care about that right now because we have to fix the problem. Well, you had 11 years to fix the problem and you never did. In fact, things actually got worse. When you look at it structurally, things were worse heading into 2020 than they were before the financial crisis. Just because we don't have the same kind of subprime mess that we did back then, it doesn't mean that there aren't all kinds of things happening today. Japan approves fresh $1.1 trillion stimulus to deal with the issues going on. Now, they break it down in this article. You could see all the details if you are interested. It's split up. They divide it. The government's going to be helping out this sector and that sector. And of course, it's never going to actually fix the crisis. That's what I talk about here on this channel all the time. I highlight all the points. We'll see what happens, of course, as the months and weeks roll on, and you can see it for yourself. Essentially, these different stimulus packages here usually go to the top 1% and higher. It doesn't ever trickle down. Maybe you get the crumbs down at the bottom there. For example, in the United States, people got the $1,200 check, some of the people, but when you look at it, who were the ones that actually needed to get these funds? We have seen numerous instances where those in need today were also in need during the financial crisis and the entire time in between. So something is broken if you have a bull market for 11 years, the longest bull market ever, and most people, the majority of people, are either in and around the poverty line or living paycheck to paycheck. There is no stimulus plan that they can create that will fix that. Japan's government finances, you can look at the national tax revenue, obviously going up higher. Well, that's right. More and more taxes. But does it ever fix the problem? Of course not. Debt to GDP ratio has gone berserk, as you can see on the top right corner. They will never slow this down. We know that already. Oh, but they owe it to themselves, so it doesn't count. G7 government gross debt, you could see on here, you got Germany, UK, Canada, France, US, Italy, and Japan. Italy is one that people should be paying attention to. They are at a critical moment here. They were really suffering back during the sovereign debt crisis that was papered over temporarily, but ultimately solidified the destruction. We'll see what happens. It would be a good thing, in my opinion, if they left the euro, took a few years of pain, and actually recouped, because if you think about it, if they did that during the sovereign debt crisis, by now it would have been much stronger. Well, that's a whole different issue, and there will be some that disagree. That's okay. I'm an outsider looking in anyway, but when I look at it from specifically this financial point of view, the economic point of view, things look a lot different when you don't have an unelected set of technocrats deciding what happens within your country. I know that if you think about it, if you ever work for a large corporation, you've got CEOs, you've got board members and directors deciding what happens in your department, and they've never walked through your department, never mind even worked in your department. How are they ever going to know what's happening there? This top-down rule, the way that it works, ultimately makes things worse over time. That's the way I see it. EU announces financial firepower of $1.85 trillion with $750 billion specifically for the crisis in 2020. We'll see what actually comes of this. As I've suggested, it usually doesn't fix anything. You know, what we had with the European Union, with the Eurozone, has been nothing but different packages. If you remember, I talked about this in my first book, the EFSF. They were going to bring this in. It was going to be so fantastic. They're going to fix every problem. Then it was the ESM. Okay, this is even bigger. We're going to resolve your problems. We got the ESM now. Then they created all of the different packages from the ECB. For example, the Corporate Sector Purchase Program, the ASP, the ABCD, the X, Y, and Z. It's ridiculous what they do. It's unbelievable. And people love this. They say, oh, look how many letters there are in there. I should be investing with them too. What are they buying? I'll buy it too. Instead, we should be looking at this like mad scientists in a laboratory, mixing a whole bunch of things from the shelf and not sitting and staring and saying, wow, that's really cool. We should be running. We should be running. That's my opinion. I'll leave that with you. This article here is talking about the Swiss National Bank. The Swiss National Bank is intervening more heavily in the foreign exchange market to weaken the franc. That's right. It's too strong. You don't want your currency to be strong. You want it to be really weak like everyone else. And can further cut interest rates if a cost-benefit analysis warrants such a step. This is funny because if you saw what happened to the franc years ago, it was becoming stronger. I was watching it appreciate against the euro and against the US dollar. And then we see the peg to the euro come up, and they said, we're going to print a whole bunch of money and we are going to devalue our currency. It's too strong. That's literally what they said. At the time, I couldn't believe it that they would do this. I thought they would want that strength, but according to them, it was too strong. So this is the way it works for the Swiss National Bank. They act like a hedge fund whereby they print up the francs, they buy US dollars. With those US dollars, in part, they are purchasing equities. They're buying US stocks, particularly tech stocks. In doing so, they could manipulate the exchange rates. At the same time, they act as a hedge fund, so they're able to basically provide a profit, and all the while doing so with fiat currency. It's unbelievable. So if you were to do this in your garage, you went in, printed up a bunch of currency, bought US dollar with it, got stocks with that, and ultimately were profiting from it, I don't think the government would look very positive towards that. I don't think they're going to be smiling and saying, you did a good job there. No. But because it's a central bank, well, that's okay. Think about how crazy that is. This is just a chart that corresponds to that article. The franc rallied while the SNB's reserves ballooned. All central banks right now are at somewhere off this planet. I really don't know what they're up to, honestly. South Korea's central bank cuts policy rate to an all-time low. Right now, 0.5%. If you would have suggested that the central banks around the world were going to these levels just a few months ago, let's say 6 months ago, in many cases, you would have bet everything you had against it. It would have been impossible, you would have said. But today, we see that's the case everywhere, everywhere, everywhere. All-time lows, record lows. In certain instances, record highs, record highs. This is crazy, but we are seeing it becoming such commonplace. In order to reduce interest rates, how do they do this? It's called open market operations, at least in the US. You gotta print a bunch of money and it pushes the rates down. How do you get them to stay down? You gotta keep printing money. People do not realize that, and that is the failure of this financial system, the way the financial education works. Even with the federal IOU at 25.6 trillion and counting, the central bank official, we're talking about Williams from the Fed, said that there's plenty of room to spend more. Quote, "I don't think we're anywhere near that limit to that. The US government is issuing a lot of debt right now, and global investors are gobbling it up." Think about how sick this is when the central banker is telling the government, go further into debt. And the public right now, investors, analysts, companies, they're all on the same page. Let's all do this. Let's all do it. Why not? Their actions have resulted in $310 billion in interest payments in fiscal 2020, a total held in relative check by record low interest rates for government debt as the Fed has sent its benchmark borrowing rate to near zero. Quote, "I don't see any problems right now in terms of deficits. Obviously, in the long term, we have to make sure that the fiscal policy in the federal government is on a sustainable path." It's not on a sustainable path. It's not at all, not even close. And yet, this is what they tell you. They tell you this because they know you're not paying attention. At least the general public isn't paying attention. This cannot be resolved by their policies, and I will yell and scream every day if I have to. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, you can do so at The Money GPS. Do you want to learn how to sell stuff online? I've got something for you. It's a free course that I created. Unlike all those others, $1,000, $2,000, this one is free. TheAmazonGPS.com. The financial system is complex, it's convoluted, it's confusing, but these two books make it very simple. If you want to check them out, link in the description, audiobook, TheMoneyGPS.com. Have you seen this video yet? It's extremely important. You definitely want to watch it. Click on it. I will see you there.